Let's take a closer look at the markets this morning. Stephanie Link, Chief Investment Strategist, Portfolio Manager at Hightower Advisors. She's also a CNBC contributor. Good
morning.
When you hear about things like that, do you wish that you had it 70, or are you like, you can't do everything?
I can't do everything, and I own Broadcom, I own Lam Research, and those names are up pretty substantially as well. Not up 241% year to date, Joe, but certainly very good returns and better valuations in my mind. But this quarter was ridiculously good. And I think even the guidance was really pretty good. They're still talking about 10% growth sequentially, up over 231% year over year, with gross margin expansion and operating margin expansion. It's exactly what people were expecting. The problem is the stock's up 23% in the past month, and again, up 241% year to date. So high expectations. I think it gets bought, Joe. I think a lot of tech gets bought into the end of the year because you're going to see this mad chase, because a lot of people are underperforming because most people don't own and are overweight the Magnificent Seven.
And that's, as far as seasonal factors go, this is one of the strongest, isn't it, this period?
Yeah, absolutely. It's seasonal. You have seasonality in our favor. We have the macro picture getting better in terms of inflation is cooling. You're running Atlanta Fed GDP running about 2% growth, which is pretty darn good considering we just came off of almost 5% growth last quarter. And I think the Fed is done, and rates are coming down. Look where the 10-year is at 4.39. So all of these things combined, I think it's kind of like a sigh of relief, and it's just, again, a chase into the end of the year, and then we'll have to deal with 2024 in 2024.
So you think that the Magnificent Seven and tech will do well in this seasonally strong period? What about like consumer stocks that you've talked about in the past?
Yeah, we talked, like last week, we talked about Target. We didn't talk about TJX. I mean, Ross Stores, Burlington. I think that the consumer's kind of mixed. We didn't get great top line or same store sales across the board, but we got amazing profitability. So the companies are doing what they can control, and a lot of the margin upside and profitability upside is due to better cost controls, lower freight, lower input costs, lower digital costs. They're doing what they can while we wait for the consumer to come back. But again, there are pockets within the consumer that have done pretty well. I mean, I look at Starbucks growing at 8% in North America. I look at McDonald's growing 9%. I look at Lululemon at 11%. So there are definitely pockets of places that you are seeing the top line, but for the others that aren't, well, at least they're seeing better profitability and kind of a light at the end of the tunnel.